Sean, can you explain what is a cap rate? And do you like high or low cap rates? What does it mean?
Yeah, it's a way of looking at a stream of cash flow, and you're basically taking your net operating income, which is profit minus expenses, right? So that's basically your net income, and you divide it by a cap rate. So as owners and operators, we can only control NOI to a certain extent. We can't control what rents are in the market and occupancy, but we can generally, through our operational capabilities, we can control net income, right? We can lower expenses and we can do our value add premiums. We can add other income items. We can manage that P&L, that profit and loss statement, very tightly, and we can control NOI. And so what a cap rate is basically it's a market determined rate of return that is appropriate for an asset class. So for example, if you're investing right now in a risk-free 10-year treasury, you may be getting a 4.5 or 4.8% rate. If you put it in a money market, you may get 5%, right? Right now, cap rates in multifamily are 5.5%. So that's what generally they say is a 5.5% cap rate. So you take your NOI, your net operating income, and you divide it by 0.055, and that's generally the price that the asset costs. So if you got a low cap rate and you same exact numerator, let's say it's $1 million, you divide it by 0.055. Let's just do that math. You guys can join me if you want to do some math. So just take $1 million stream of income. That's your NOI. That's the 12 months of NOI. And you divide it by 0.055. That asset is worth $18 million at a 5.5 cap. Okay. Let's say that same stream of income, you do nothing to the property. We buy it today. We operate it exactly as the prior owner operated it. And we go to sell it in 3 years. Again, it's $1 million, no change in NOI, but the cap rate is now 0.04. That $18 million asset is now worth $25 million. So that's the power of what we call cap rate compression. So we want cap rates to go low, but we don't hope for that. What we're hoping for is that we can increase the NOI, and then hopefully through some, through the market, and there are expected reductions coming in cap rates as the Fed lowers their rates. But if we can push NOI, i.e. the numerator up, and then the market takes the cap rate down, it's a much bigger return for our investors. I don't know if I explained that well,
I
Sarah, but
think so. It increases, so bringing net operating income up, and if the market cap rate, which is not in your control, goes down, which we're thinking it will, then that creates a situation where the sale price in 5-7 years when you go to sell it is higher. So
correct.
then we all make more money on the appreciation on the backside.
Get really excited when I talk about cap rates.